Pod for another deep dive. This is the fourth one in our series, Wharton Professor's Forecast 2025. If you remember in our last deep dive, we were exploring all those predictions about the future of retail. But today we're going to be turning our attention to housing and what the market might look like a year from now. And honestly, as someone who's been trying to, make sense of these rising rent prices, I'm equal parts intrigued and maybe a little terrified.
Well, it's a topic on everyone's mind for sure. To guide our deep dive today, we're going to be looking at insights from Wharton professor Susan Watcher. About a year ago, she urged us all to survive until 2025.
Oh, yeah, I remember that. That was pretty ominous at the time.
It was a memorable quote for sure. I'm curious, though, did 2024 feel like a survival year for you in the housing market?
Well, looking back, I'd say 2024 felt like a roller coaster. Interest rates just kept climbing, but here I am still paying rent. What about you? What surprised you the most about how things actually played out?
I think for many, the unexpectedly robust GMP growth was a bit of a shock. It came in at 3.3%.
Wow, 3.3%. That's almost double what most analysts predicted.
It really was quite a surprise.
Okay, so economics 101 time for me. Why is that growth such a big deal, especially for housing?
It's a chain reaction, really. Strong growth impacts housing demand, which of course keeps that upward pressure on prices.
Okay.
And then it also influences inflation, making it harder for the Federal Reserve to lower interest rates. And right now, whether those rates come down is the big question mark hanging over the entire market.
It makes sense. So let's get specific. Let's unpack Professor Watcher's predictions about the residential market. Where do things stand right now?
Well, Waters identifies something that she calls the lock-in effect. And it's been this major factor shaping the market.
Oh, wait.
Basically, a lot of homeowners got those incredibly low mortgage rates. Back in 2021 and 2022, we're talking 3%, 4%, even 5%.
Yeah.
And today, with rates around 6.8%, it makes absolutely no financial sense for them to sell and give up those low rates.
Yeah, I totally get that. Why trade in a 3% mortgage for a 7% one? Especially when everything just feels so uncertain right now.
Exactly. So even if homeowners want to move, they're basically incentivized to just stay put. And that has a huge impact on inventory. Fewer homes on the market just means buyers are competing for what's available, which pushes prices up. It's a tough situation for anyone trying to enter the market.
So it's a bit of a paradox, a seller's market where no one wants to sell.
You hit the nail on the head. Now, Watcher suggests one way this lock-in could ease is if we see a drop in the 10-year Treasury yield. That would likely lead to lower mortgage rates.
Okay.
And potentially encourage more homeowners to list their properties.
Okay, that makes sense. But can you explain what the 10-year Treasury yield actually is?
Sure.
It sounds a little intimidating.
It's actually simpler than it sounds. Essentially, it's the interest rate the U.S. government pays. On debt, it borrows for 10 years.
Okay.
And here's why it matters. Mortgage lenders often base their rates on this yield. So if the 10-year yield goes down, mortgage rates typically follow suit.
Ah, I see. So should we all be glued to our screens watching for any dip in that yield?
It's certainly one indicator to watch. But as we mentioned earlier, that surprising economic growth, coupled with that persistent inflation, especially in food prices, it's making it tough to predict where those interest rates might go.
Got it. So it sounds like there's not much relief on the horizon for buyers. Is new construction helping to ease the inventory crunch at all?
That's a great question, and it's something Professor Wafter highlighted. Home builders are absolutely ramping up construction to try and meet that demand. They're even focusing more on building affordable options, which is a positive sign. I'm curious, have you noticed any new construction projects popping up in your area?
Actually, yeah. Just down the street from me, they just broke ground on a whole new development. With townhomes and smaller single-family homes, it's definitely more compact living than the sprawling houses I grew up around.
It's a trend we're seeing across the country, driven in part by affordability challenges and changing demographics. But even with builders going all in, new construction just can't keep pace with the demand. And the truth is, even those affordable options are still out of reach for many. Watcher pointed out that affordability for new construction is actually at a 40-year low.
Ouch. That's a sobering statistic. So are builders doing anything creative to address this affordability gap?
They're definitely trying. Watcher mentioned that many are offering incentives, like mortgage buydowns and flexible financing options, especially with the hope that those interest rates will eventually decline. Again, that 10-year Treasury yield becomes a crucial factor to watch.
So bottom line, the housing market is still pretty tough for buyers. What about the rental market? We're seeing some headlines about falling rents. So is that a more viable option right now?
It's a good point. With homeownership becoming increasingly difficult, we're seeing a surge in demand for rentals, and the increased supply IOS providing some relief. In certain markets, we are actually seeing flat or even decreasing rents.
Really? I haven't seen that in my area yet, but I'll keep my fingers crossed.
It's definitely location dependent. Some areas are seeing more new apartment construction, which is helping to keep rents in check. Have you noticed any new apartment buildings going up in your neighborhood?
I think there are a few projects in the works, but nothing's completed yet. It's still a competitive rental market out there.
No doubt about it. And even with the current dip, Washer predicts that this rental relief might be temporary. As more people get priced out of homeownership, that demand for rentals will likely increase, and we could see rents climb again in the next couple of years.
That's definitely something to think about. Well, we've covered a lot of ground on the residential side. What about commercial real estate? Last year, there was a lot of talk about potential risks in that sector. What's Washer's take on the current situation?
That's another important piece of the puzzle. Water believes that the worst might be over for commercial real estate. She's seeing signs of a recovering capital market and more deal flow, suggesting that investors are feeling more confident.
So we dodged a bullet with that potential banking crisis everyone was worried about. Remember those headlines about commercial real estate loans causing trouble for banks?
Those fears seem to have subsided for now. Wachter emphasized that banks are in a much stronger financial position today than they were a year ago, and that the risk of a systemic crisis tied to commercial real estate has diminished.
That's good news. But what about all the empty office space out there? With remote work becoming so prevalent, will those giant office towers eventually become ghost towns?
That's a question a lot of companies are grappling with. Wachter acknowledges that remote work is here to stay, but she doesn't see office spaces disappearing entirely. Instead, she pointed out that companies are becoming much more strategic about how they use their offices.
So no more sprawling headquarters filled with empty desks.
Not necessarily. Some companies are definitely downsizing, but others are actually seeing increased leasing activity, particularly for Class A buildings. These are the premium spaces, with all the amenities and high-tech features, and they seem to be in demand as companies try to create collaborative and appealing work environments to entice their employees back to the office.
It's fascinating how the pandemic has really forced us to rethink the whole concept of the office.
It really is.
And on that note, we'll take a quick break. When we come back, we'll dive into Watcher's predictions for the future of both the residential and commercial markets, and what it all means for your housing decisions in 2025.
It really does feel like we're at a turning point, not just in terms of physical office space, but how we work and live in general.
It's true. And it makes me wonder if that line between residential and commercial real estate might start to blur a bit in the future.
That's a fascinating observation, and it speaks to a larger trend that Warter touched on, this growing importance of flexibility, whether it's flexible work arrangements, flexible housing options, or even flexible financing. It seems like adaptability is key in today's market.
Okay, before we get too far ahead of ourselves, let's recap some of Professor Watcher's key takeaways about the current state of housing. What are the big things listeners should keep in mind?
Definitely. First and foremost, that lock-in effect is real, and it's a major reason why inventory remains so tight.
Right.
Homeowners who locked in those low mortgage rates a few years ago, they're staying put, which limits the number of homes available for sale.
And even though builders are ramping up new construction, those new homes are still expensive, putting them out of reach for many buyers.
Exactly, especially with interest rates where they are.
It's a double whammy. High construction costs and high interest rates. Makes for a challenging affordability equation.
It does.
Yeah.
And on the rental side, even though we're seeing some price drops in certain areas, that relief might be short-lived as demand continues to outpace supply.
So basically, no matter which way you slice it, the housing market is still pretty tough to navigate.
It's definitely a complex landscape, but I think Watcher's insights give us a valuable framework for understanding the forces at play. So let's shift gears for a moment and talk about practical advice.
Okay.
Based on what we've learned today, what would you say to someone who's trying to make a housing decision right now? Buy, sell, rent, just wait it out. What's the play?
That's the million-dollar question, isn't it? If I had a crystal ball, I'd be a rich woman.
But honestly, I think the biggest takeaway from Professor Washer's predictions is that patience is key. Don't let FOMO drive your decisions. Do your research, understand your local market, and be prepared to wait for the right opportunity.
I wholeheartedly agree. And this might sound obvious, but it's crucial to remember that everyone's situation is different. There's no one-size-fits-all solution. When it comes to housing, Your financial situation, your risk tolerance, your long-term goals, these are all factors
Exactly.
that should guide your decision.
For someone with a stable job and a healthy down payment, buying might make sense, even in this market. But for someone who's just starting out or who values flexibility, renting might be the better option.
So it's not about finding the right answer for everyone. It's about finding the right answer for you.
Precisely. And that's why I think it's so important to do your due diligence. Talk to a financial advisor, consult with a real estate professional, and really think about what's best for your individual circumstances.
Those are great tips. But what about folks who are feeling paralyzed by the uncertainty? Should they just sit on the sidelines and wait for the market to magically become more affordable?
I wouldn't necessarily advise that. Remember, life doesn't always wait for the perfect market conditions. If you find a property that meets your needs and your budget, and you're financially prepared, don't be afraid to take action.
So it's a balance between being cautious and being proactive.
Exactly, but it's crucial to go into any decision with eyes wide open, understand the risks, the potential for interest rate fluctuations,
Right.
and the fact that buying a home is a long-term commitment.
And even if you're leaning towards renting, it's still important to be informed about market trends. Things change quickly. And what might be a good deal today could be a different story a year from now.
Absolutely. So whether you're team buy or team rent, staying informed is essential. Now, before we move on to Watcher's specific predictions for 2025, I want to emphasize another point she made that really resonated with me.
Okay.
She talked about the importance of looking beyond just the housing market and keeping an eye on the bigger economic picture.
What do you mean by that?
Well, as we discussed earlier, factors like inflation, interest rates, economic growth, these all have a ripple effect on the housing market.
So we can't just focus on what's happening in our own little bubble.
Exactly. We need to understand how national and even global trends might influence the local housing market. For example, if inflation continues to climb, that could push interest rates higher, making mortgages even more expensive.
So if I'm hearing you correctly, it's not enough to just scroll through Zillow and check out open houses. We need to be paying attention to the Federal Reserve economic forecasts and even geopolitical events.
You're getting it. The housing market doesn't exist in a vacuum. It's interconnected with the broader economic landscape.
So basically, we need to become mini economists to make sense of it all.
Well, maybe not many economists, but having a basic understanding of these broader trends can definitely give you a leg up when making housing decisions. And the good news is there are tons of resources available to help us decode all this economic jargon.
That's where Khan Academy comes in, right?
Absolutely.
You guys have so many great free resources on economics, finance, and even specific topics like mortgages and interest rates.
We do.
Yeah.
And I encourage everyone listening to check out those resources. The more informed we are, the better equipped we'll be to make smart decisions, especially when it comes to something as important as housing.
I love that. Knowledge is power.
It really is.
Okay, so we've talked about the current state of the housing market and some key takeaways for buyers and renters. But what about the future? What does Professor Wachter's crystal ball reveal about the housing market in 2025 and beyond?
Now we're getting to the good stuff. And let me tell you, Wachter didn't shy away from making some bold predictions. But before we dive into those, she uses a phrase that really struck me: known unknowns. She said the housing market is currently full of them.
Known unknowns.
Yeah.
That sounds like a riddle. What does that even mean?
It's actually a brilliant way to describe the current situation. We know certain factors are at play: inflation, interest rates, the lock-in effect. These are the knowns.
Okay.
But how these factors will interact and ultimately shape the market, those are the unknowns.
So it's like we have all the pieces of the puzzle, but we don't know what the final picture will look like.
Exactly. And that can be both exciting and a little nerve-wracking. It means there's potential for both opportunity and risk.
Okay, so buckle up, everyone. We're heading into uncharted territory. But with Professor Wachter as our guide, I'm feeling cautiously optimistic. When we come back, we'll delve into her specific predictions for 2025 and beyond, and what it all means for your housing decisions.
Welcome back to Contech Pod. I hope you've got your notepads ready because we're about to dive into Professor Wachter's predictions for the housing market in 2025 and beyond. And let's be honest, after that known unknowns cliffhanger, I'm dying to know what her crystal ball reveals.
Oh, get ready for some bold forecasts because she doesn't hold back. Let's start with the question on everyone's mind: interest rates. Will they finally come down from those dizzying heights?
Please tell me there's hope for those of us dreaming of lower mortgage payments. There might be. Remember that best-case scenario we discussed earlier where rates could fall to the high fives by the end of 2025? Washer believes that's still a possibility, but it hinges on a few key factors falling into place.
Okay, break it down for me. What needs to happen for those interest rate dreams to come true?
First, we need to see inflation continue its downward trend. It's been cooling off in recent months, but we need to see more sustained progress. And it's not just about the actual inflation numbers, but also about what economists call inflation expectations.
Okay, so maybe explain what that means, because I know I'm not the only one scratching my head.
Basically, it's about psychology. People need to believe that inflation is truly under control, not just for a month or two, but for the long haul. If businesses and consumers think prices will keep rising, they act accordingly, demanding higher wages and raising prices, which can actually fuel more inflation. It becomes a self-fulfilling prophecy.
So it's like we need to collectively chill out about inflation for it to actually go away.
Yep, that's a great way to put it. Stable inflation expectations are key for the Federal Reserve to feel confident about lowering interest rates.
Got it. So inflation needs to be a distant memory. What else needs to happen for those interest rates to drop?
Continued economic growth. Wachter believes that a Goldilocks scenario of moderate growth without triggering a surge in inflation is the sweet spot for interest rate cuts.
It's a delicate balance, for sure. Too much growth, and we're back to square one with inflation fears. Too little growth, and the economy stalls. So we're hoping for that just right pace. Now, let's play pretend for a second. Let's say everything goes according to plan and interest rates do drop to the high fives by the end of 2025. Does that mean the housing market will suddenly become a buyer's paradise?
I wouldn't expect a sudden shift, but it would certainly have a positive impact. Lower mortgage rates would make homeownership more attainable for some buyers, potentially boosting demand and pushing prices up a bit.
Okay, but what about affordability? Would those lower rates be enough to offset the fact that home prices are still really high?
That's the key question. Washer believes that even if rates decline, the underlying issues of supply and demand will persist. And remember, she predicted that strong demand for rentals will continue even with lower interest rates.
So even if buying becomes slightly easier, renting might not get any cheaper.
That's what Washer's forecasting. She believes that rent relief might be temporary, and those decreasing rents we're seeing in some areas could reverse course as more people get priced out of the buying market and turn to rentals.
So the rental market could actually tighten up in the next couple of years. Not exactly what renters wanted to hear.
It's definitely something to keep in mind, especially if you're considering signing a long-term lease. Now, after listening to Washer's insights, I'm curious, has anything changed for you in terms of your own housing plans? Are you leaning more towards buying, renting, or just waiting it out?
You know, it's funny. Before this deep dive, I was feeling pretty overwhelmed by the whole housing situation. But hearing Professor Washer break down the factors at play, and especially that emphasis on known unknowns, has actually made me feel more empowered.
I love that. That's exactly what we hope to achieve with these deep dives, giving listeners the knowledge and context to make informed decisions.
Exactly. So, no, I don't have all the answers figured out. But I do feel more confident about asking the right questions, doing my research, and ultimately making the choice that's best for me, whatever that might be.
And that's the perfect takeaway from this episode. There's no one-size-fits-all solution when it comes to housing. But by understanding the market dynamics, staying informed about economic trends, and seeking out expert advice, we can navigate this complex landscape and make choices that align with our individual goals.
Couldn't have said it better myself.
Right.
So whether you're a seasoned homeowner, a renter looking for your next place, or just starting to dip your toes into the housing market, remember that knowledge is power. And that's what Khan Academy is all about.
Absolutely. And on that note, we encourage you to check out Khan Academy's free resources on economics, finance, and personal finance. They're a fantastic way to empower yourself and make informed decisions about your housing journey.
Great advice. And if you enjoyed this deep dive into Professor Washer's insights, be sure to like this video and subscribe to Contact Pod for more in-depth discussions on all things tech and business.
Until next time, happy housing hunting.